Hey guys, today's video is all about credit card debt and how to pay off credit card debt quickly. So if you're carrying some debt on your credit cards, don't worry about it too much. The average American carries over $6,000 in credit card debt, so you're not alone. If you've just got a few thousand on there, it's not too bad. As I said before, the average credit card debt is over 6,000, so it's quite common to have debts with credit cards. Obviously, if there's something you want to buy, it's an easy way to get money and worry about it later, which is, it might be good in the moment, but it's not good for your finances long term. So how can you pay off your credit card debt quickly? Well, there's a couple of ways. Probably the best way that you can pay off your debt quickly and a lot easier than just paying it off without doing anything, is to transfer the debt to a new credit card which has a introductory period of 0% interest on balance transfers. So basically, if on the card you've got now, you're probably paying about 15% interest on average. There are some that are even higher, maybe up to 30%. Depends on your credit and things like that. But if you take out a new credit card, you can transfer all of that debt to the new credit card, and there are many cards that offer between 6 to 18 months 0% interest when you transfer a balance from another credit card. Now, one of these cards that's particularly good, I've got written down here, is the City Diamond Preferred card. If you check that out, you do need quite good credit to get that, but that does offer the full 18 months 0% interest. So that's a great one if you're looking at clearing up credit card debt, because then you'll have 18 months of just paying down the amount. There'll be no interest whatsoever. So obviously that's the best option there. There's various other cards. There's an American Express, I think it's a Blue Cash card or something. That's also about 14-15 months, I think, 0% interest. So that's another option there, and you can get that with a bit lower credit rating. But that's probably the best way of paying off credit cards, because within 18 months you should be able to pay off whatever, if you've got up to about 6,000 in there, you should be able to pay that off, taking into account there will be no interest on that. So it will just be, the 6,000 and you just paying that off, as long as you don't add to it, of course, which you definitely don't want to do. You want to focus on lowering that debt. Now, another way to do it is to take out another loan that's got lower interest and pay that off. So, for example, if you've already taken out a personal loan, or you've got a car loan, they might be, car loans typically quite low because they're secured. They're low interest, I mean. So what you can do is you can extend that loan. You can increase the amount that you've borrowed, and to pay off the credit card. So if the credit card's 15-16%, whatever it may be, what you do is you'll go to the bank or online, it depends. In the UK you can extend, increase your loan amounts online. It's very easy to do. You don't need to call anyone. You just literally log into your online bank and you can extend the loan. They normally accept it as long as you've been making your payments and things like that. So what you do, you extend the loan for the amount that you've got outstanding on the credit card. So if you owe 5,000, for example, and you've got a loan, you've taken out a loan for 10,000, you'll increase that loan to 15,000. You'll pay off the high interest credit card, and then you'll move all of that debt will be moved into the loan. So the amount you owe stays the same, but obviously it'll be lower interest when it's changed onto the personal car loan, whatever it may be. Now that's another good option. It's not as good, in my opinion, as the first option, just because you're getting 0% interest for 18 months. Now, it sort of depends as well if you can control yourself with the cards, because you may be tempted to start spending with the new credit card, and then you're just going to add to the debt. But you know, if you're focused on lowering the amount of debt that you've got, then that's probably the best way. As I said, you know, you've just got such a long amount of time, you know, with 0% interest on the amount. So that's what I recommend doing. You know, a balance transfer to a new credit card that's got a long introductory period, 0% interest on balance transfers. Now, what else can you do? You can, of course, do none of these things and just focus on paying it down, whatever the interest is on it. There are some credit cards that are low. If you've got one that's not too high, if you've got quite a low interest rate on your credit card, then it probably doesn't matter that much. I mean, it depends how much you owe as well. If you only owe $1,000, then let's be honest, it's probably not worth going through all the hassle of, you know, getting a new card, transferring the balance, or extending your loan and things. You know, if you owe a small amount, then just, you know, saving a bit each month, you'll pay that off quickly enough. Or, you know, if you owe a very small amount, then you could just take out an additional loan for a small amount and just pay it off quickly like that, you know. Even if you haven't got any, you know, any other loans at the moment that you want to extend, you could just take out a new loan. You know, if it's $1,000, just get out a $1,000 personal loan if you can. I don't know what the minimum amount is in each place, you know, obviously it varies and things, but if you can get out a loan that's, you know, 5%, $1,000, just pay it off, and then, you know, it will save you 10% extra interest payments. So that's, you know, another option there. Now, you know, it is important to pay down these, you know, credit card debts, because once you start, you know, going month for month, when they're, you know, considering that they're high interest, 15% or more typically, you know, you miss one payment, the amount goes up, and then you miss the next one, it works up again and up again and up again, and it's just, you know, a snowballing effect there. So what you want to do is you want to, you know, get rid of that debt as fast as possible and get it on low interest. You know, that's my advice for dealing with credit cards. Now, you shouldn't think that credit cards are bad. If you can manage your credit cards well, if you can, you know, use them responsibly, they're great, because you can get cash back, which is, you know, basically just free money. Yeah, not a huge amount, but it's better than nothing. If you're going to spend that anyway, you can get points, you can get, you know, free flights and things. You know, go in those bigger lounges at airports and stuff like that, and you know, it's easy to accumulate those points if you use the cards for everything. You know, you buy your groceries, you buy, you know, use them to pay your utilities and things. It's very easy to rack up a lot of points. You know, just using them as your, you know, your way to pay everything basically. But you know, if you're thinking about improving credit, then you should only really use about 10-15% of your you know, credit limit. So if you've got a $1,000 credit limit, you should only really be using $150 a month, which shows sort of responsible spending. Because card companies, they don't, and banks and things, they don't want, you know, saying they give you 10,000 limit, they don't want you to spend 10,000 every month and pay it off. They want you to spend, you know, responsibly. You know, if you spend 1,000 a month and pay it off, then that shows that, you know, you've got access to so much funds, but you know, you can control your spending. You don't need to, you know, use all of that limit at once, and that, you know, helps your credit rating, of course. You know, so just a few tips there. So give the video a like, guys. I'll see you in the next one.